welcome to Beyond Just Money. My name is Samta, and today we have with us the head of content of Calkine Media Limited, Ms. Nidhi Sinha, as our guest speaker. So our today's agenda is on trading tips and tricks of none other than Mr. Warren Buffett. Now, Warren Buffett, as we all know, is a globally known and respected investor who is also the CEO of Berkshire Hathaway. He's someone whose every word is lapped up as a golden tip by the investors worldwide. Welcome, Nidhi, to Beyond Just Money. And please tell us that what makes the CEO of multi-billion-dollar Berkshire Hathaway so special.
Thanks, Samta, for having me on this show. And it's always a pleasure to talk about Mr. Warren Buffett. And I must say that, he is really special, and that's why investors follow him like crazy. And why not? I mean, he became a millionaire just at the age of 30. And the best part is that every nugget of his wisdom that he shares is supported by equally robust logic. And that is what makes it so appealing. He's in the habit of sharing folksy wisdom, which is rolled in unparalleled wit, Samta. And this he does with the youngsters as well as elders. So I think that's what makes him really special. And that's why he has such a huge fan base worldwide, irrespective of the age group, really, Samta.
Right, Nidhi. And if you could, please take our listeners through these 5 pressure tips from the investing maestro, genius and godfather, Mr. Warren Buffett, that we were talking about before we started with the podcast, it will be great.
Samta, Buffett definitely has a lot of tips for investors, and we'll go ahead with the top 5 that we think are the most relevant. So one of the things that Buffett believes is that temperament is much more important than intellect, and that is tip number 1. So we've heard him saying this many times, and I quote, you don't have to be smarter than the rest. You have to be more disciplined than the rest. Similarly, it would help if you had a temperament that neither likes to be with the crowd, nor does it want to go against it, really, Samta. So according to Buffett, an investor who focuses on objective facts makes decisions which are relatively free of emotion. And when you make such decisions, you are more likely to get better results most of the time. So that is tip number 1, Samta. Tip number 2 is that first avoid loss and only then look for gains. So there have been many instances, Samta, when the Oracle of Omaha, as he is popularly known as, clearly told investors to start looking for gains only after avoiding losses successfully. Does that sound confusing? Let me put it straight. So what it means is one must eliminate all those risk factors which could expose your investment portfolio to a possible loss. So once you do that, what remains in the portfolio is more likely to make gains. So a portfolio with minimal risks can actually compound your gains even faster. Coming to tip number 3, that is, one must invest in only those instruments that they really know well, like the back of your hand, really. So you must gain in-depth knowledge and wisdom before you begin your investment journey, especially when it comes to the stock markets, because sometimes it's very easy to burn your fingers at the bosses because there's so many risks involved. So it would help investors if they familiarize themselves with the stock market fundamentals. And in this, one of the most critical aspects for an investor is to be aware of his own strengths and weaknesses. So it is better to say no to the businesses that are beyond your understanding, rather than dipping your toes into uncharted waters that may lead you to regret later. Tip number 4 is really very simple. So Buffett says that you must make the most of the opportunities, since these are not something that come every day. He says, if I have to quote him, that when it rains gold, put out the bucket, not the thimble. So according to Buffett, Samta, you must grab every opportunity, because it's not every day really that an opportunity comes your way. So it would help if you acted quickly and decisively whenever you see something worthwhile investing. To give you an example, you must invest heavily when stock prices are significantly low, since such a scenario, does not come every day, and you must make the most of it. Last but not the least, tip number 5 is be careful when others are greedy and be greedy when others are fearful. That's a very popular quote by Buffett, and it's very, very relevant for investors because it really sums up all the secrets of a successful investment strategy. Buffett says that investing has a lot to do with human behavior. He advises investors to get cautious when other investors turn greedy and their greed starts pushing up the stock prices to record highs. Because what happens sometimes, this is the time when the markets may fall. On the other hand, Samta, Buffett advises enthusiastic behavior when other investors shun the market. Because that is the time when stock prices are low and the markets are relatively not that risky, and it is the time to invest and put in your money there, Samta.
Thank you so much, Nidhi, for sharing your tips and tricks with our listeners. And I'm sure that our listeners will definitely make the most out of Warren Buffett's 5 golden investing tips. And in fact, I am definitely going to make the most out of these tips that you've shared.
Thanks, Samta. I really hope these tips work for our listeners and they would do well to make notes.
Great. Thank you so much, Nidhi, once again. And to our listeners who've just tuned into our channel today, if you want to listen to this podcast again, please log on to our website, which is 𝐾𝐿KineMedia.com, or you can even visit our YouTube channel. Please subscribe, and we will see you soon with yet another insightful and interesting episode of Beyond Just Money. Until then, as we say, stay apprised and invest wise with 𝐾𝐿KineMedia, your best guide.